Out of the Ordinary Insights, brought to you by Investec Specialist Bank.
Welcome back. You're watching Captains of Industry with Geoffrey Qhena. He's the CEO of the Industrial Development Corporation. Before we took the break, we spoke about where he had come from. Well, we now know where he is. He's the CEO of the IDC. Mr. Qhena, I'd like, if you can, maybe for the opening minute or two, just sum up for me some of the key challenges that you see facing the IDC as a state institution in a developmental state, as I said earlier, that is South Africa.
Well, it's the ability to continue to grow. I think it's important that we grow. And then you grow by making sure that you invest in sustainable businesses. That's number one. But also the ability to ensure that we integrate the continent. I think it's important. South Africa is a market, but it's limited. But there's lots of opportunities if we integrate into the continent. That's that. And now, talking about the growth that I referred to is the sustainability. Because remember, the business model that we have is now, we know government has got lots of other challenges. So it's important that as we help companies that are struggling, companies that are starting, that we sustain ourselves without going back to government.
Right.
But also the other point is to really retain these professionals that we have. I mean, IDC has got a high concentration of accountants, engineers, MBAs, economists, you name it. And it is important that you continue to stimulate them, you continue to support them so that they give you the best. Because those are, if we were in a factory, we'd have machines. But in that case, it's those people that we make sure that not only are they competent, but they have the passion and the fire to really make a difference.
Now, the IDC is an important institution because you're an arm of the state, but at the same time, you do not rely on government funds. So, in other words, you are able to advance the government agenda at the same time without calling for support from the fiscus. Let's just look at that model, the way it is currently constructed. So you get about the bulk of your money, your earnings coming from dividends from companies that are listed on the JSE. At the same time, of course, you borrow from DFIs, from the markets. And I saw in your last set of results, you're talking about going into the bond markets. Is that the optimum that it can be? Is there any way that model can be changed or perhaps improved? Or is this the best that it can be?
Presently, Godfrey, I think that's what we have. If we're in other countries, probably where the budget was much bigger, a number of their development finance institutions do get funding from government.
Right.
But there's advantages and disadvantages for that. The disadvantage is that you don't grow as quickly as you can. I mean, if you look at the impact that this economy of us needs, it needs a bit more than just IDC has with the size of about 100 billion balance sheet. However, the discipline is that you have to make sure that you're sustainable.
Right.
So that forces you that to be sustainable, because then it becomes easy if you know you're going to get every rand from government.
Yeah.
But I mean, that's what we have now. I mean, ideally, I would say we should be getting more and more. But it makes us to go and engage with other state-owned entities to work with them much more smarter. For an example, the Unemployment Insurance Fund, where we're borrowing from them. But it's not only availability of funding, but also the cost of funding. Because remember, we come in much earlier. But it is important that as much as we come in earlier, we don't make it too expensive for entrepreneurs to access the funding. Absolutely. Because we don't take deposits, unlike the other traditional financial institutions, they take deposits, we don't.
So I'm going to come back to the issue of the cost, but I just wanted to continue this discussion around your role and that of the government and how the two merge. So obviously you speak to the government, you advise them about the economic environment that the country is and the business environment particularly. Do they listen?
We engage with them. I mean, if you look at the Industrial Policy Action Plan, which is driven by the Department of Trade and Industry, we did a lot of research. We engaged with them because as they identified which sectors should be supported, so they've listened to us. I mean, we're not the only ones that government takes advice from. It helps us because we interact with private sector. Right. So some of those lessons.
You're an important bridge.
Absolutely. Absolutely. We are. So we engage. But I can't sit here and claim that we're the only ones. I'm sure government's got lots of other advices from different departments and institutions, really, which the government has established. But I would like to believe that whenever we speak, they do listen.
They do listen.
Well, they haven't disappointed us now in some of the things that we've said.
I'm sure there are many people who would speak about the other side. But let's talk about the other issue, which is the cost of helping businesses set up, rescuing businesses, and helping sustain the businesses. Is there any way in which the laws that you give to people can be lower than they currently are? Do we need to look at another mechanism here?
Godfrey, within the constraints that we have, what we do as IDC, we ring fence some of the amounts which we cross-subsidize. I think that's the one way. Because we say, for an example, we have a fund which initially was 10 billion rands, where we said people can access it at prime less 3. Because we were really saying if you access that and you create jobs at a cost of less than $500,000 per job, it's worth us subsidizing you. Then the question could be, is that enough? But if I look at the uptake, we still have about 7.5 billion rands of that, and it's almost 2 years now. So I think that's there. But we have to continually try, as IDC, we have to continually try and find cheaper sources of funding so that we can pass it. But also, people need to remember that we come in projects that are very risky, projects that are startups, and we know there's statistics in there that the first 3 years of a business are very difficult. So they either make it or they don't. And also there's competition in some of them there. So it's not only the cost, obviously the cost will go a long way, which is why we spend a lot of time. But for us, it's really the availability of it. But some of them, we do give them cheaper funding, but they still fail. I mean, we've got lots of examples which we can share. But hopefully, what we try and do is that we have more winners than failures. Hopefully.
I'm being careful here because I'm speaking to my shareholder, because one of the starters, of course, was CNBC Africa. You were one of the guys who adopted this early and came in and supported us. So, but I am going to ask difficult questions. Let me, you know, there's a lot of discussion around the country about where South Africa is. Some people suggesting that South Africa is at the crossroads and that there are many challenges that are coming up. But importantly, though, South Africa is being challenged by some of its own African brothers. So you've got Kenya setting up in the east as a gateway into the continent. You've got Nigeria also setting up as a base in the continent. Ghana has recently come up. Now, when you look at South Africa, what's your sense personally? Do you feel like some other people are doing that South Africa is at crossroads and that something needs to change for the country to be able to harness and grow and perhaps keep its position as the biggest and strongest economy in Africa?
Crossroads, I'm not sure. But what is clear is that we can't just do business as usual. The global economic environment has changed forever. I don't think it will ever be the same again. What we thought were developed countries are experiencing their own problems. So we can't necessarily just be looking at them for assistance and for finance. They have to try and build up their own institutions, their own banks. Developed countries are the ones where growth is. But we are lagging. I mean, the Minister of Finance said growth has been revised to 2.5%. I mean, that is very low for a country with more than 25% of unemployment. And the observation is right. The other African countries are really upping up their game. So that means really a true partnership between government, business, and other state and other entities or the social sector. Really, we have to have a true partnership.
What needs to change, though?
I think we need to trust each other more. I think we need. It's important that we trust each other, but it's important that we engage frankly. I don't think we. You see, if we don't engage frankly, I think we will not be able to achieve, because then we will not be addressing the real issues. I think if people feel, if private sector feel government is not playing the role, I think people must be free and frank to say that. But equally so, if government is feeling that business is not playing its role, I think it must, because only from that really we can really work together. But without any real partnership, it's going to be difficult. Otherwise, I mean, when we came from the democratic movement, where we became a new government with a democracy, I think we are the darling and South Africa was a gateway. But I'm not even sure now that statement can hold true, because other African countries, which is good by the way, that other African countries must come up as well. But then that means we must also up our game.
Yeah, I think you touched on it, it's trust. One of the things that people have been talking about is the fact that, of course, South Africa produces all this platinum, South Africa produces all this ferrochrome, South Africa produces all this copper and all these other minerals, but we're exporting them raw. And the big debate has been around how do we beneficiate the whole issue around industrialization of South Africa. South Africa's industrial base is eroding. How do we fix it? Peter Bruce, writing in his newspaper the other day, said, you really can't force companies to industrialize or to beneficiate. It's got to come as a natural development and growth of the company and opportunity created.
You help create an environment by another country, because remember, we're competing now. So you either give incentives to companies to really take and try and industrialize.
Right.
But if you make that environment conducive, those that have the technologies will be able to will come in because we have the resources. But also, I think we need to realize that the areas where we can manufacture relatively cheaper is no longer in the developed countries.
Right.
It's in here. So then, if government is also clear in its policy to say beneficiation is what we promote, which is what it is now.
Yeah.
And also government has been saying we're spending so much, almost 3 trillion on the infrastructure and all of that, but we're encouraging localization, and government rewards those that will ensure that there's localization here. That will give an opportunity to those that want, because you don't want that to compete with the same level as somebody who just exports everything. I mean, you're saying, what is the benefit for me to come in and beneficiate? And it must be clear. I mean, so that's I think there's lots of opportunities. I mean, this infrastructure program, I think, is going to provide it. The thing is then, government needs to be steadfast to say we will encourage localization.
Absolutely. Yeah. Geoffrey, unfortunately, we've run out of time. I'd have loved to continue this conversation. Perhaps we must pick it another time. But Geoffrey Qhena, CEO, Industrial Development Corporation, thanks very much indeed for joining us. That's Captains of Industry this week. Until next time, it's goodbye.